Well, hi everyone, and welcome to Impact Dashboard Live. My name is Paul Shurin with Impact Data Source, and we're going to be taking a look at Impact Dashboard today, our online web-based economic impact model. So let's take a look at a couple screenshots here of what the model looks like before we actually jump in to the model and play with some inputs. If you have questions, if there's something you want me to cover specifically in today's call, feel free, go ahead right now and plug in any questions you have in the GoToWebinar panel, and I'll certainly be able to get to them. But I'll just go through here and kind of highlight some of the things that Impact Dashboard does and how our clients are using it. So here we have a couple screenshots from the model. On the left-hand side, we're summarizing the impact of a project, and we're showing that in terms of those jobs, the salaries, the capital investment. You can see in this case it's a manufacturer. And then the bottom half of that left-hand page is a projection of the additional tax revenues, the additional costs for the city over a 10-year time period. And so in this case, this project is expected to generate benefits of maybe $250,000 over 10 years. On the right-hand side, we go into more detail about where the $250,000 came from. And so in this case, we've got this particular city receiving some additional sales taxes and property taxes, as you can see there. And then on the cost side, we're backing out some costs to provide government services, as well as the cost of providing like city-owned utility services there. If we click forward here, one of the other things that we do in Impact Dashboard is analyze incentives. And so here, these are just a couple screenshots. Again, we'll go into more detail in a moment of some of the analysis that you can do. So we can model a property tax abatement, which is pretty common for economic developers, or things like a sales tax rebate, or even just kind of maybe a job grant. So in this case, as the main screen that you're looking at shows about $1,500 per job paid out over their hiring schedule over 5 years. And if we look at that, that's $75,000. We're going to compare that investment in the project, the $75,000 incentive. We think of that as an investment. We compare that to the net benefits that the city receives, so that $250,000 we were just talking about. And so we calculate a rate of return and a payback period. So all of this kind of comes together. All of this information that we're pulling comes together in Impact Dashboard, and we make it really nice and user-friendly for you. So just to kind of give you an overview of just impact modeling in general and the way that we think it's helpful or useful for economic developers, our model is really focused at combining three different pieces of information. So first off is the economic impact, then the fiscal impact, and then incentive analysis. So pulling all three of those things together, I think, is usually what's needed by an economic developer when they're thinking about a project. So why are those the three things we're pulling together? So if we look at on this one-page report that we have pulled up here, we see economic impacts are highlighted or pointed there in the upper right-hand corner, and that's where we're able to talk about the number of jobs that are being created, and how many spin-off jobs does that create in the community, and what are those workers earning in terms of payroll and that sort of thing. And so that's our focus on economic impact, and that's going to drive the second thing on our list, which are the fiscal impact. So if we look at the arrow on the left for fiscal impact, this is where we're translating everything into the additional revenues, the additional costs for local tax districts. In this case, we're looking at it just for the city. This one, we've got a little bit different numbers, about $230,000 of net benefits, and that's over our 10-year period. This accounts for the revenues and the costs, so that's our fiscal impact. Now, the third piece that kind of ties all of this together for economic developers is when you're analyzing an incentive. So again, a $75,000 incentive, maybe $1,500 per job, that gets us paid back in 3.4 years. So we can calculate a payback period on our investment as an economic developer. So that's kind of where we're going with this, why we think all three of those pieces of information are important, and how we kind of combine it all into one report. Before we go any further, though, I will take a moment just to kind of describe the differences between Impact Data Source, which is our company, and Impact Dashboard, which is the product. So the company Impact Data Source was started by my partner, Jerry Walker, in 1993. Again, my name is Paul Shurin. I joined Jerry in 2009. We're specialized in economic and fiscal impact analysis. So majority of our consulting services are in that direction. We work primarily with economic development organizations and help them understand the impact of potential economic development projects. Most of our consulting clients are considering economic development agreement or some type of incentive. Now, on the product side, what we're going to be talking about today and what we've been looking at some screenshots from is Impact DashBoard. And Impact DashBoard is our web-based app. We have over 100 ED organizations using the model across the country, and kind of all different states, a wide range of counties there. Our clients represent generally either economic development organizations or local governments, and so that ranges from cities with less than 10,000 in population to large metro areas or large cities. So it's really kind of no matter what your community is, we've worked with the community probably in your size. So let me jump over now to Impact DashBoard, and we'll take a look at how all of this comes together, how a user interacts with the model. So here we're going to a little different project than we saw from our screenshots before, but the concept obviously is the same. So here we've got Project Zip. What we're looking at is that same report that we were just kind of looking at, our one-pager report. This one's a little bit different. We've got a different set of inputs. We can see here different number of jobs and salaries and so forth. But here again, we're trying to get our benefits, costs, and net benefits for a particular city. In this case, our city is Arlington, Texas. We can see what the specific revenues are. And we can also see an incentive analysis as well. So this is our report page of our app. The way that we got all this information in here in the first place was on our scenario info page. So over here, this is where I've entered in the company's project-specific information. So they've told us they plan to hire 340 workers. We can see that I've actually plugged in the hiring schedule. So we see in year one, there's 240 jobs to be created, then there's 40 more in year two, and so on. So it gets to a total of 340 over the time period. If we click on this little arrow here, what happens is we can see all 10 years of this. So if we had a hiring schedule that stretched out beyond that just first couple of years, we'd be able to see that just by clicking on those arrows. Generally speaking, we're just showing the first couple of years so you don't get long tables in every screen. Now, one thing that we're doing here, as I mentioned, is running this project out over 10 years. You're not committed to 10 years by any means. We generally think 10 years is a good time period to go with as a default, but you could certainly extend this out. For example, if you wanted to look at a 15-year time period, you can do that. So if we wanted to do that, I'll just do it real quick here. If I click on the settings, so most of the things that aren't obvious inputs here, if we click on our settings, we can generally get to all of those extra inputs. So if we click on settings, over here we can see we've got some general assumptions. I'm going to go down here to our scenario length. I'm going to put in 15 years, and that's going to stretch everything out in our report to full 15 years. So now our analysis stretches out over 15 years. We've got net benefits over 15, and even our inputs. Again, if we wanted to have our jobs phased in over a period of time, we have inputs for the full 15-year period now. So lots of flexibility there. We can see the other types of information that we're going to be plugging in here on this left-hand side. So this is the information that we're providing about the project. So we want to know the number of jobs being created, things like the salaries. So we can plug in the average salary for these workers is $65,000 a year. And let's say that that's going to increase at 3% per year. So we can see what that looks like all the way down through 15 years. The other types of inputs include capital investment. So we're asking you to tell us how much are they going to invest in, say, real property improvements. So maybe that's construction for a new building. And then the FF&E, so that business personal property. And if we can close that and we can take a look, we're also have an input for building permits and fees, taxable inventory. So this is, again, a Texas community. So in Texas, inventories are still subject to tax. So we have an input for taxable inventories. We also have inputs for taxable purchases and taxable sales. Again, Texas has local sales tax. So those are important inputs for us if they are applicable. They may not be they may not be relevant in every case. So you don't need to fill in something every time, but you certainly can if it's relevant. Over here, we're seeing kind of a snapshot of those results. So this is a little bit of an abbreviated version of what we saw in that one-page infographic. We're seeing our net benefits over the time period and some of our economic impacts up here. This is a focus here is on the city of Arlington. But if we were interested in Tarrant County, for example, we'd be able to jump over there and see what the benefits are for that entity as well. We can see up here, we've got access to all of the different tax entities in our area. So what we're doing on our side, as we're seeing these results for Arlington or the Tarrant County and so forth, on our side as Impact Data Source, we're building in all of the tax rates and parameters that you need to run your analysis. So we're taking care of modeling the local tax structure, building in all the demographic and other information that we need to run this, so that when a user comes in to evaluate a project, all they need to know would be the project-specific information, the jobs, the salaries, the capital investment. They would also have, we didn't look at this, but we would also want to know what industry the project is operating in. So in this case, we're saying it's a corporate headquarters, and we're using multipliers. These multipliers are going to give us those spin-off benefits through the indirect and induced economic activity. And these the multipliers are built in from the Bureau of Economic Analysis RIMS 2 multipliers. If I'm interpreting this multiplier here, it's type 2 employment multiplier 1.7. That means for every direct job that's created, there's about 1.7 total jobs created in the community. That includes the one direct job and then 0.7 spin-off jobs in the community. You can choose, if you're bored or someone is wary of using these, the voodoo behind these multipliers, you could just disregard the multipliers essentially and put in a 1. So a 1 would just eliminate all of the spin-off impact. And you could do a scenario that way if you chose to. So you'd just be focusing on, say, the 340 direct workers alone and not giving those additional kind of 0.7 spin-off workers, in this case, about 260 workers. So this is really all the information we need. One of the other screens that I skipped over was the location. This is where you would identify where the project is located. So in my model, I've got just a real basic setup here. I've got 2 different cities in Tarrant County. I've got Arlington or Burleson, and I just choose where this project is located. So I'm saying it's in the city of Arlington, it's in Tarrant County, it's in Arlington ISD, and maybe I did want to include that college district because that applies. And so what we do again on our side is to build in all of the relevant tax districts for you. So if you just had one city, one county, one school district, there might not be a lot to select here, but we would build in the specific districts that you need for your model. So again, the information that you provide is really just on an individual project basis. Just tell us, you would enter into the model the number of jobs, the salaries, capital investment, and so on. And then you'd be able to get these reports. These reports are kind of the combination of the local tax structure, which we've taken care of and built into your model, and the information that you've provided about the specific project. Now, one thing that we haven't touched on yet is how you can model different types of incentives. As we have in this case, we have about a $4,000 per job incentive. We also have a property tax exemption that's footnoted here of about $2.5 million. And so what I'll do now is show you how our clients can model different types of incentives. So here on the public support tab, we can see right now we're on a tab for the overview of all of the incentives. We can see there's a property tax incentive that's included for the city of Arlington and Tarrant County. And then we have what we call a non-tax incentive for the city of Arlington. This is the $4,000 per job. We say it's non-tax because it's not tied to a specific tax revenue. Now, in total, the total package or the value of this incentive under consideration is about $4 million. If we wanted to, what we can do is provide a description of this to kind of put more detail or narrative behind the incentive. And if you type something in here, this is going to show up in our detailed report. So we have not just those one-page reports that we were looking at, but a detailed report, which we'll look at in a moment. If I click here on this left-hand side on the city tab, this is where we're able to model different types of incentives. So for example, here I am modeling a property tax exemption of kind of a sliding scale. So my abatement, or excuse me, my exemption on the building is starting at 100% and then declining by 10% over the time period. And now we're running this over 15 years. So if we needed to see all 15 years, we'd certainly do this. The exemption is only running for 10 years, but we could, if it went longer, we could extend it out. The FF&E we're exempting entirely, so the business personal property is going to be completely exempted. So on our right-hand side, as we look at this information, we can see the building abatement value here is being shown below the line, getting backed out along the way. Now, what we're showing in total here is really just an analysis of the property taxes to be paid to the city on the company's property. So in this case, we've got $6 million of property taxes that are expected to be paid without making any adjustments first. So that's these dark blue bars that we see here across over the time period. All 15 years of these, if we stack them on top of each other, that would be $6 million. Now, the exemption that we're modeling here is kind of notated here, but then kind of calculated here. And we can see the amount for the building or the FF&E in a given year. All of these exemptions together, when we add all these up, adds up to about $2.5 million. And that's where we get that exemption value that was noted on the previous page. So here's our exemption. Here's the total amount we thought we were going to get. So on a net basis, we're going to get about $3.8 million. That's going to be noted by our orange line here on a year-by-year basis. So this graph is kind of cool just to get a sense of like how much property tax you're getting. And in this case, it happens to be kind of backloaded, so to speak. You're not getting very much property tax in the early years, but then you're getting more and more over time. If we wanted to see that in a table format, we can do that as well. So that graph was nice, but sometimes you just want all the numbers in one spot. And so here we can see exactly what that is. And we can even see the building value versus the FF&E exemption. So 2.5 million together, but here's how it breaks out. So that's modeling an exemption. We can actually use any kind of terminology we want. So if you were doing maybe a 380 rebate, you wanted to call it a property tax rebate, we could do that as well. Just use our terminology to match what we're doing. We can also call it, as you see here, an abatement, exemption, a rebate, or a reimbursement. From the math side of it, it's all going to be the same. From the technical, follow through, so to speak, there are differences obviously between these, but for our analysis, they'll be done exactly the same way. So that's a property tax rebate. We also had the ability to provide a capital investment sales tax rebate. So on those initial purchases of materials and so forth, if you gave an exemption on those, we could model that. I'm not going to mess with that. Same thing with the project itself. If a project will generate taxable sales, you could give a rebate on those taxable sales in the model. That may not be something your community does or maybe even has the ability to do, but it's an option in here if you want to rebate things like the project's taxable sales. Now, finally, the last one in on our city schedule here is the non-tax incentive. As I mentioned, we're doing a $4,000 per job. We can see kind of graphically what that looks like. So down here, we're seeing the incentive being paid out over 4 years. We can see the gray bars indicate our incentive amount. So we're paying, it's a total of 1.36 million as we see that total amount. But here we can see, okay, in year one, it's about 960,000, and then we can see the other amounts over time. These amounts are tied to the hiring schedule. So if we remember, we had hiring over the first 4 years, and that's what we're looking at here, just applying 4,000 per job. So that total incentive, 1.36 million, is noted here also in our gray line that kind of stretches across right at 1.36 million. Now we're comparing this investment, so this non-tax incentive is viewed as an investment in the project. We're comparing the investment to the return on investment, which we treat in our model as those net benefits to the city. So this orange line is marking our net benefits to the city over the time period. So in this case, our net benefits are up over $5 million, we can see here. Now, what we want to know is at what point will we have collected enough in net benefits to cover the value of this incentive. And so that's what our payback point is telling us. The payback period identifies that point at which the project will generate enough net benefits to pay back the value of the incentive. So 5.8 years right here, kind of almost at 6 years, we can see is our payback point. That gives us a rate of return of about roughly 30%. So if we wanted to change this, let's say maybe 4,000 was too much. Maybe we wanted to do 3,000 per job. We can do that just as easily as typing in that new number. Now it's about $1 million. Our payback period gets a little bit shorter. If we wanted to, we could do some other things. So for example, let's say we wanted to do a payback period. We wanted to say, look, we'll do some sort of incentive for this project, but we have to get paid back in 3 years. 4.5 years is too long. We have to get paid back in 3 years. So if we do that, we can specify that payback period, and we'll calculate the size of the incentive that would be paid to get us a payback period in 3 years. So that kind of gets all calculated here on the fly. I've been using incentive per job and I've been using payback period, but if we just knew the incentive amount, let's say the company has asked for 500,000 at year one and 500,000 in the end of year two, we can just put those two payments in there. It's $1 million, and that gets us paid back in 4.4 years. So if we bake all that into our analysis, we can go back to our report, and now we can see everything is updated to show our $1 million incentive with a 4.4 year payback period. I mentioned the detailed report, but I'll also mention that we have this report from the City of Arlington's perspective, but we can also pull it up for Tarrant County. In Tarrant County, it looks like I had a little property tax abatement in the first couple of years, and we can see what that analysis looks like here for the county. If we wanted to see if we're concerned about the school district or maybe the hospital district, just want to get a sense of what they're receiving in net benefits, we can click on these buttons as well. And we can also put together what we call a community report that's going to provide a single report with all of the entities. So this is a one-page report with all of the entities, or whichever entities we actually wanted to include. So in case we wanted to include the city, and let's include the county college, now we've got all of them on here, and we can see across all of them what the benefits are and so forth. So this is another way to get kind of a one-page nice report that captures all of the districts. If you want to get a detailed report, kind of a more traditional narrative type report, we can do that here in our detailed report. And we have sections broken out on the left-hand side to help you navigate. So we wanted to see our economic impact overview. This is where we're talking about our direct jobs, spin-off jobs, and so forth. We're also have on the economic impact overview, we also talk about the population impact. So as you have maybe 340 new jobs being created, how many of those positions are going to be filled by people that relocate to the area and kind of cause some population effects for the city? And so that's an important part of the puzzle of our analysis. And so we highlight that impact here, and then that flows into our fiscal impact. And then also, we can see a summary of our taxable property over the 15 years that we're looking at it. So the building values, the FF&E values, and so on. If we go to our fiscal impact overview, this is where we're showing the benefits, costs, and net benefits for each one of those entities that's included. We can see the city is getting about 5.6, the county is getting about 2.1, and on down. Now, if we just scroll down through the rest of this, we have first a public support overview, which we looked at before. I modified some of the numbers, so now it's 3.8 million in total value for the incentive package. And then we go through each one of the districts in this detailed report to show what are the benefits, costs, and net benefits for each one of those kind of specific line by line, sales taxes, property taxes, and so on. So that is kind of a lay of the land here, so to speak, as we're looking at the model and how things come together here. What we've been looking at so far is one scenario for one project. But what I want to do is take a step back and show you how you can run multiple iterations of these projects so that you can model everything you need to. So if I hit this little close scenario thing, this is going to save everything we've got here and just close out of the scenario. And now we go back to this area that we call our project control center. So for Project ZIP, this control center is showing us that we have a total of 5 different scenarios for Project ZIP. And this is my original one with the original data, 10-year abatement, and 4,000 per job. I ran another scenario, you can see here, where I pulled it back to 140 jobs, but I still did a 10-year abatement and 4,000 per job. If I click on that, when I hit this little eyeball here, what we'll do is preview. So we're getting a snapshot of the results of that scenario before we actually go into it. Now, if we wanted to, if we click on this, if I click on this scenario, it's a different one than we were looking at earlier. We go into that scenario. This is the one that has 140 jobs. We've eliminated any of the spin-off impact because we wanted to exclude that. And we can see what the benefits, costs, and net benefits are in this case. So this is like the idea here is with these different scenarios is if you were working with, let's say, a spreadsheet model or something, and you did a save as, and you saved a different version of that same project, you'd be able to kind of have as many different files out there saved as you wanted. So in my case, let's say I did a file save as a bunch of times, and now I've got 5 different iterations of that original analysis. And so you might, use this to kind of go through the different scenarios that you're considering, or maybe as information is updated over time, you can name these whatever you want. So you don't necessarily have to use the terminology that I'm using here. And then off of any individual one, you can copy. So if we wanted to pick up from where we left off on this original data one, we could hit copy, or you can maybe if you wanted to take off from this particular scenario, you could copy that one. We also have the ability to delete a scenario, obviously, if you don't want to have all those around. But as we preview those, we can see the some of the minor differences, and then once you could click in and make more changes to it. So on this project control center, not only do we see all of our scenarios and then a snapshot of that particular scenario, we also see this area where we have the ability to apply tags. So in this case, I've identified this particular project as being associated with fiscal year 2019, and it happens to be a headquarters project. And so again, this applies to our overall project zip. So I'm going to take another step out where we've been looking at everything related to Project Zip. We have multiple scenarios for Project Zip, but now as our clients are using this model throughout the year, they're going to have more than one project. So if we go back to projects, we're going to see a list of all of our active projects. So actually, this is a tile view, and we can see here's Project Zip. We've got 5 scenarios. Those are those tags we just talked about. And here's another tile. This one is for a hotel project. We only have 2 scenarios there. I've got a tag on this one that we were just doing some training for that one. So it's not a real project here in my kind of made up example. But we've got a number of tiles. These each represent a project. Each project has a number of scenarios associated with it. We have this hierarchy up here where we can identify projects based on their status. So we have projects that we've won, projects that we've lost, projects that we're putting in the archive. So for example, let's say that Project Zip happened to be a win for us, and we want to move that to our category for projects that we've won. I'm going to do that. Now, if we click over here to our Won tab, we can see my 2 projects that I've won in fiscal year 2019. We have the ability on any of these pages, I'll do it here, to search for projects. So we could start typing anything and just find that particular project. We can also filter by tags. So if we want to find any projects with the IDB training tag, we can find those 3 there. We can also look at all of our projects across all of the projects that we've created. In this case, we've got a little icon indicating the status of each one. So Project Zip was a win. Hotel is still active, let's say. This hotel, a different hotel, is lost. You can see naming these things can be important to make them unique. But we can see we've got different projects that we've archived or won or lost. So that's some of the hierarchy around saving scenarios, saving projects, and copying projects and so forth. You can do a lot with this, and so one of the things I guess I'll touch on again just briefly. If you have questions, feel free to type them in or to follow up with us afterwards. So just to talk a little bit more about what we're doing on our side as we set up a client or set up a model for someone. So in the settings, and you have access to this as a user, you can see exactly what information is going on in the background. So what property tax rate is built in here. And so again, this is something that we're going to do on our side, make sure it's up to date and so forth. But if you were curious and on a particular analysis, you're looking at the report and something's not seeming correctly, you can jump back here into the settings. You could say, okay, so for our property taxes are based on this 0.6348 tax rate. It's a little weird looking at this way. It's broken out, as you can see, by land, buildings, FF&E, residential properties, and inventories, each having their own tax rate. In this example for our client in Texas, there's no difference in the tax rate across those different types of property. In other clients, it may not be so simple. And so there we can see our property tax rate that we've got plugged in. We've got assumptions around our sales tax here of the different sources of sales tax revenue, this different sales tax rate. We're not using income taxes in Texas because that doesn't apply. But for these other revenues, we're picking up things based on the other sources of revenue that the city might have. And we're on our side, we're doing some research looking at the city's budget. And so with all of the research that we're going to do, again, for each one of these tax districts that we're building into your model, we're going to put together a user guide that details out all of the assumptions that are built in. So you have access to that. You can see how we came about some of those assumptions. And then you'll have access to view those here. And even if you need to, make a change if necessary. And a lot of these things around tax structure and the tax rates, you probably won't need to make adjustments. But other things like our general assumptions are maybe a place where you would make changes. So for example, we talked about the scenario length. Maybe instead of 10 years, we want to look at it over 15 years. Or maybe you have a specific depreciation schedule that you want to apply to the FF&E. Or maybe we want to make some sort of distinction between the amount the company is spending on the construction project for building and improvements and separating that from how much actually comes on the tax rolls in terms of the form of market value. And so you can do that sort of thing here, and even controlling, say, real property appreciation over time. So all those assumptions are available to you as a user. When you're in here, you can make changes to them, and you can see what they are, and you have the ability. That's pretty much everything I wanted to go through here today. If you have other specific questions, feel free to follow up with me. I appreciate you taking the time to join us here on Impact Dashboard Live. And again, feel free to reach out if you have questions. I will say one thing about the pricing. We provide Impact Dashboard on an annual basis. So it's an annual subscription, and you can use the model as much as you want. So you can create as many projects, as many scenarios as you want throughout the year. Just one annual subscription price. The fee depends a little bit on how many tax districts we're going to be researching and building in for you. So in the typical case, if you're just focused maybe on one city, that's going to be a little bit more streamlined than a more regional model where we've got all the municipalities in 5 different counties or something like that. So the pricing depends a little bit on what your needs are and how much research goes into that. But feel free to reach out if you want a specific quote or any other information about Impact Dashboard. Thanks again for joining Impact Dashboard Live. Talk to you soon. Thanks.